How's it going out there? It's January 27th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. So my daughter had her first gymnastics competition, which was last weekend. Go to St. Augustine, World Golf Village. Wake up at 5:30 a.m. It was a 8 o'clock event. Hour drive from my house. And I have to admit, it was pretty cool. Well organized, awesome. And there's different levels, right, in terms of experience and talent. And my daughter's mostly a beginner. By beginner, she's been going there for 6 months, 3 times a week, 3 hours a session. She's a beginner. That's how serious it is. It's a really, really good place, and they go into competitions. So, my daughter's been doing great. Just has huge potential. She's small, strong, fast, and competitive as hell. And she's really dedicated. And those of you that have kids, sometimes your kids are all over the place where they like to do 20 different things. This is what she loves to do. And it's cool to see that she's focused. So her teacher, one of the best around, is in this region, told her, said, hey, you know what? You should do the competition. And it's your first competition. It's okay. And you're probably going to mess up or whatever, but go ahead and do it and get used to it. My daughter's like, I'm in. I'm definitely doing it, which was, really cool. I mean, you're performing for a lot of people. Now, there's 6 teams, around 6 teams, I believe, and 75 girls in total for her level. And my daughter's team, specific team, had 4 members on it. And it's similar to the Olympics, where you have 4 events. It's the vault, floor exercise, balance beam, uneven bars. And keep in mind, right, there's a ton of people in the room. It's a giant room. Think of, for those of you who attend conferences and like the main conference hall, that's how big it is. I mean, I know you probably can't remember that because we're not allowed to go outside and go to conferences still. It's changing, though. It's changing a little bit. But due to COVID, I know a lot of you, there's been really no conferences in the past 12 months. But think of something like that if you've been to it. And you're performing in front of the judges. You have music playing loud, so lots of pressure, and my daughter handled it well. And she needs to learn like the technicals, the fundamentals, things like that. Like full leg extensions, raising your arms when you finish. That's where they deduct points and they take points here and there. But she didn't mess up. I mean, she didn't fall off the beam. We saw a few girls fall off the beam, make mistakes and fall, and she didn't. Which is cool. She just she didn't forget the routine, and the only thing is she was tentative. It was her first competition. By tentative, she was really focusing on just not messing up instead of really being free. And they finished the ceremony. I think it was like an hour and a half, right? They finished the competition. Then they have an awards ceremony where the best performers get medals. So we go to a different area, right? And the awards ceremony is almost longer than the competition, right? And there's a reason why. And here's what I'm getting to. And keep in mind, around 6 teams, 75 girls, and just those 4 events, vault, floor exercise, balance beam, right, and uneven bars. So I'm figuring, I'm a math guy. There's 4 events, that's 3 medals each, right? Gold, silver, bronze, so 12 medals. Then you have the overall combined event, right, the combined winners, which is maybe another 3 medals, that's 15. Maybe you throw in a sportsmanship, most improved, I don't know, maybe 20 medals in total. They gave out over 150 medals. 150 medals. I mean, it could have been 200, but several kids had 4 or 5 around the net, and they're calling one at a time. And I mean, there was like 20 different categories, and I didn't get it. I'm like, there's just 4 events. I mean, some girls had so many medals, they were jingling around their neck when they got up to get the next one, and it was loud. It was like, they were banging against each other because they had so many medals. I was like, I'm not joking. It was crazy. And my daughter's team, which includes 3 other girls who have done the competition before, they won, I think, 4 medals each. And my daughter just won 2 medals. I said, just 2 medals, right? What world? It's just 2 medals. 1 for 5th place, 1 for 8th place. Now, my daughter, competitive, got upset. Right? She got upset. She only won 2 medals. I was surprised she even won 1. I mean, it's her first event ever. Many of these girls have been in numerous competitions, lots of pressures. They've been training years. She'd only been going for 6 months. But the bigger issue, how are you giving out like 150 plus medals? I mean, how does this promote competition? How does this prepare these girls for real life where so many of them get rewarded for mediocrity? because having my daughter get upset because she only won 2 medals, I mean, she got up from the floor. So there were all the kids like sitting on the floor together in their teams, and she got up and then she went to sit by me because I was on the side standing up, and she had this puss on her face, and I told her, get your ass back on that floor with your team right now, congratulate them, and support them. And then when we got into the car, the way home, I told her, remember that feeling. Remember that feeling that you want to do better. Because if you want to be great, if you want to be better than everyone, if you want to have 5 medals hanging from your neck, you have to work your ass off. It's what I did as a kid. It's what a lot of you did as kids. I mean, I was like the fat guy playing basketball all the time where people made fun of me. I couldn't keep up. I didn't get any trophies as a kid. And then I said, you know what? F that. I need to get better. Made it my mission to destroy everyone that made fun of me. Shot hundreds of shots a day. Rain, shine, hot, cold, 30-degree weather. Didn't matter. I lost weight, got faster, started shooting better, worked on the things that I wasn't good at to better compete with these guys. Then I started getting trophies. My team started winning a lot of championships. And that feeling of winning, especially when you put in that hard work, right? And you put in all the hard work, the dedication, you put in that feeling, you can't really describe it for anyone out there. Like just winning something, even if it's a team event or if it's like tennis and it's single or golf, the amount of work that you put in and that, you achieve that, it's a feeling you can't describe. I mean, the pride, the confidence, the will to keep pushing, get better. I remember we were in a league right across from my park, and it was one of the biggest leagues in Queens, New York. So it was across the street from my house, actually, the park, and in Ridgewood, New York. The park's called Farmers Oval. You know it. When I was a teenager, probably around 17, I started playing this league, which was, again, one of the best in Queens. And there's a team called the Wrecking Crew. And they were called the Wrecking Crew because they wrecked everybody. They destroyed everybody. I mean, their point guard was 6'3". If you don't know basketball, that's the smallest guy of the starting 5, right? They had 2 forwards that was 6'8", 6'9". The point guard used to rip me all the time. They dunked on us, beat us by 40. And our team was young, but we were driven, we were confident. It took about 3 years, but that one year we played them in the playoffs, tons of people watching. We all played great, had a couple steals, the team played awesome. Our forwards had several blocks on their big men, and we beat them. We beat them. I mean, you guys know how old I am, pushing 50 almost. I was like 2021, but I have to tell you, I still remember almost every possession of that game. It's one of the most remarkable achievements for me because, working hard with your team to beat that team, the dedication. I mean, the guys shaking our hands at the end, they gave us a lot of respect since, we were them 10 years ago, right? And they were a young team trying to make a name for themselves, and, it's like passing the torch. But, man, I still can't believe we won, that feeling. And let me tell you something about winning, because people who say winning isn't everything never won anything in their life. And it's not every single thing or everything, but winning is fun. It's awesome. It gives you confidence. It teaches you how to deal with pressure. It builds character. But this is a talk I had with my daughter on the drive home. I was just surprised how every single person who competes gets a medal at these events. I can see maybe a 4th place medal, maybe, but 8th and 9th place. I mean, we have to get out of this mentality in America. It's how we're treating our kids. And I'm not perfect. I'm guilty of some of this stuff too. But we're totally engulfed in their lives. And I don't mean like you're being a good dad, a good mom, and you're going to game. I'm talking about going over the top and making sure you know every single person at school they're talking to, looking up them on their social media accounts to make sure they're okay. See what they're doing every second of the day. I mean, how many of you track your kids on iPhones? You track your kids on iPhones. You call them, what are you doing over here? Why are you riding your bike on this block? You're not supposed to. I mean, we were never like that growing up. You feel bad for them when they fail, even though they're going to learn more from failing, right? And from those mistakes than winning any day of the week. That's why I cover my losers more than my winners on this podcast. That's how you're going to learn. But we have to get out of that mindset of rewarding our kids for just doing okay. And I'm not being a hard ass here. I don't know all the answers, but I do know if my parents who were really cool growing up, been fortunate, but if they treated me like the way we're treating our kids today, where, hey, it's okay to fail and reward them for mediocrity, I wouldn't be the person I am today. I don't even think I'd start my own company today. There's something to be said for that. And it's going on. It's getting worse. It's getting much, much worse. We're really engulfed in our kids, every single thing they do. Anyway, it's not a knock on those girls who really worked their asses off to compete and did amazing. And no knock on the families who do so much for these kids. I mean, there's a lot of dedication when you get the, especially if you have traveling baseball teams or basketball teams or whatever. And my wife is driving my daughter gymnastics 3 times a week. It's 45 minutes each way, and there's a 3-hour in between. She almost drives home and then goes back there to pick her up. And it's located in Georgia. I live in Florida, right? I'm right on the Georgia border, I-95 on the East Coast. But she drives to Georgia so my daughter could work with one of the best coaches in the region. And I have to tell you, she's going 3 times a week. A lot of these girls are going 5 times a week, 3 hours a day. So kudos to those parents. But we really have to rethink of how we're teaching our younger generation. Because just rewarding them for doing okay, it's not the real world, man. I mean, it's really tough out there. I went to Wall Street. It's tough. It's cutthroat. And people take what they want. You got to stand up for yourself. The battlefield. If these kids are not prepared, they're going to give up on almost everything they try and give up immediately, refuse to even compete with people who are better than them. And I'm not just talking about sports here. In college, your career, everything you do. But it needs to change. Will it? Probably not. But it does. Trust me, if it does, our kids would be much better off. They'll work harder, be more passionate about things, and definitely be more prepared to get out there in the real world, which is what we want for our kids, right? We want them to be able to succeed. That's the goal. So as parents, sometimes you can't be their friend. You have to be their parent. You have to tell them no. You have to get out there. Again, I'm guilty of this too. We like to spoil our kids, but man, it is really, really over the top now. Really over the top. Now, speaking of the younger generation, lots been going on with the markets. Not sure if you saw what's happening with GameStop. I'm sure you have. You listen to this podcast and following stocks. But GameStop, basically the past 3 weeks, it's incredible. And I'm going to bring in our buddy, senior research analyst, Daniel Creech. And we're going to dig into a lot of topics, including SPACs, including latest earnings, Microsoft, Intel. Very, very strong for Microsoft. It was up and then, came down, open today. But yesterday they reported it was great. But we are going to really dig in deep and get into things that people aren't talking about when it comes to GameStop. More than that, the stock went from, the single digits in September, and it's now 300 and change as I speak. At last I looked 5 minutes ago, it could be 250, it could be 350, it could be 400, who knows? But Daniel, thanks so much for coming on, man. We got a lot to talk about.
Yeah, welcome. I'm glad to be back, and this is kind of be the Las Vegas edition. Too bad we're not hosting or broadcasting from Vegas, but basically like this with GameStop, which is 355 even, which is up 362% today. I'm looking at GameStop right now.
That's a bad day for GameStop.
You bought it yesterday, you're up 362%. Not bad.
Now, I'm going to explain what's happening with GameStop really quick, and then we'll get into it, and just to bring everyone here, which I like to do with this podcast, right? Because a lot of people do not know what a short squeeze is. So a short squeeze is when someone's short. So if you buy a stock, at 10 and you sell it at 20, right? You have to sell it at 20 or 30, 40. You have to sell it eventually, and that's how you book your profit or loss. If you put $10,000 into the stock and you buy it at 10, your risk is $10,000. If it goes to zero, that's how much you lose. When you go short, and I'm talking about if you go short a stock, your losses are infinite because you're shorting the stock at 10 and then go to 20, 50, 100, or 300. What'd you say it was, Daniel? 300 what?
It was 355.
355. That's amazing. It was 240 this morning, I think, when we walked in. So, so in the short sells, what happens is just like when you buy it, in order to lock in the gain, you have to sell it or loss. You have to sell it. With short sellers, they just take that step first. They sell it first, and they need to buy it back. Now, when this stock gets out of control and goes higher and higher and higher and higher, it forces the short sellers to immediately buy the stock at whatever price. So it'll go to 20, 30, 40, 50, and they keep buying it because they need to get out of their position, because if it goes to 200, 300, 400, they're wrecked, which is what happened with GameStop. We see short squeezes all the time. However, we've never seen anything like this coordinated. And Daniel, I guess we'll start with you, and hopefully I explain that well, because a lot of people, again, I'm getting questions. A short squeeze, just to bring everyone on the same page of what's going on. But yeah, it's pretty crazy.
Yeah, it's beyond crazy, and it's morphed into basically the mindset of divisiveness. So it's the little guy versus big greedy hedge funds. Do you want to talk about Wall Street Bets? Because it's all over CNBC and everything. Reuters.
Go ahead, go right. That's the Reddit crowd that started this blog, I think, a couple months ago, I think in April, and really started attacking specifically this company and Melvin Capital, right?
And I honestly don't know what started all this off on the sense of, because Wall Street Bets has been around since I don't know when. I've heard about them several times, and I've checked their message board a few times here and there, but nothing regularly. So I'm not exactly sure what got them so upset or targeted. And if that's the case, I mean, I'll be honest, I don't know all the details here. I don't know. There was 2 million users on the Wall Street Bets Reddit feed. I'm sure that's grown, to a silly number in just the last few months. But yeah, you have, it's kind of a neat thing because you have high frequency traders and hedge funds that are blamed for a lot of market manipulation by the little guy and in general. And then you have things like Robinhood come along that disrupt markets. Basically get everybody down to free trading, easy access to it. And then when that kind of turns on you and people get the idea of trying to squeeze you out of a position, you can push stocks high enough. And hey, this goes well though, because fundamentals don't matter. And this is the perfect example. The funny thing is there's so many different angles we can talk about this that I'm interested by. And one of them is the fact that people are literally just pointing out the fact that they're trying to hurt somebody else to buy this. So, it's a free stock market. You can do whatever you want. It doesn't have to make sense, but that's an interesting thing going on right now.
We're going to go a lot of different places with this because it's very important because there's something much bigger taking place than just a simple short squeeze. But, let's, even when we get to the details. So Melvin Capital is a $12.5 billion firm. They were short GameStop for a while. Now, when you disclose, for funds who have over $100 million in assets, they need to disclose all their positions on the long side. So you don't have to disclose your shorts, right? And that's every quarter they do that. It's called 13F, right? It's filing with the SEC, and you get to see who Warren Buffett owns and what they bought, what they're selling out of, and all this stuff. It's pretty cool. I've covered that a lot in this podcast. But when it comes to options, especially put options, money managers with over 100 million capital, they must disclose that. So Melvin disclosed that it had 5.4 million puts on GameStop last quarter, right? And it was worth 55 million at the time. I'm sure it's worth zero now. Whatever it's forget it. But but it's a position they increased by nearly 60%. So now you're talking about, Dan, the Reddit crowd. It's they all got together, right? Wall Street Bets, it's called, and all of a sudden they have over 2 million subscribers, and it started with one group saying, "Hey, Melvin Capital is short this stock. Let's try to, get a short squeeze here." And I actually went on that account, and I'm going to read you some of these things because now it's probably has 3 million users, but I screenshot a couple of these things and just a couple of it's freaking on. So like I said, it took 9 years for this blog to reach 2 million subscribers. There's 500,000 that joined the last 3 days. I did this yesterday. It's probably another million people I joined. You have GME ripping. I'm in tears already. Life-changing money is turning into destiny. Just life-changing money. 10,000 into 750,000. And this person says he's still holding. When I did this, the stock closed yesterday. Where did it close yesterday?
Well, it's up $286.
Yeah.
So it's at 363. So
yeah. So I think it closed, wherever it closed yesterday, 140 something. And he's still holding today. He's probably a happy guy.
Yeah.
A little bit, right? So you got to think that 750 is now a few $1 million. Melvin is down another 25% on G. So they're targeting, right, Melvin Capital. And again, it's a $12.5 billion firm. Best hold I've ever effing seen. FLMAO. For those of you older, laugh at my ass off. Someone is actively driving attention to non-GME posts on Reddit. Don't be fooled. Like, all these guys are really together, though. But it's yesterday I posted a $2.5 million loss on GameStop, but today I'm posting a $7.8 million gain.
Jeez.
These guys that posted on Reddit. Just some of these things are just absolutely amazing. I mean, the hedge funds are bad, and they're going to be fighting dirty. Ladies and gentlemen, the man behind MarketWatch is calling you conspirators of crime. Someone call Papa Elon. We got to take a rocket to the moon before the SEC comes knocking. I mean, it is really entertaining. We did it. Buy the rip. Continue to buy the rip. We made it, boys. Keep going. it's incredible. I mean, if you really read the Bible, it's incredible. So they're all together, and now, so Melvin Capital lost 30% of its value, got crushed, and they required a bailout to stay afloat. And you had two major guys who have ties to Melvin, Steve Cohen of Citadel, and then Point72 Asset Management. They injected $2.7 billion into the fund. That was yesterday morning. And now, what's the percentage again? How much is it higher, Daniel?
It's actually 373 now, so it's almost 296. It's up 385% today.
That's incredible.
Yeah.
And so the thing is that I'm going to try to, because if you watch CNBC, you guys know the story. I'm going to dig in really deep on a couple topics with Daniel here, but Melvin Capital, it was like a coordinated effort to really, and this is a large Wall Street firm, $12.5 billion, that these, I would say, I wouldn't even call them kids. They're all professional traders on there, but most of these kids are young who are able to leverage the hell out of everything. We're seeing outages at Ameritrade, E-Trade today, across like Robinhood, 5 or 6 platforms, because the volume is insane. I'm not just on games, just across the platforms. A lot of them aren't working right now as I speak. But Melvin was also short other names at National Beverage, iRobot, and Bed Bath & Beyond, which are all up tremendously. And again, Melvin has to cover their losses, right? Or they lose everything in the fund. So when they're covering, they need to buy back all these positions, and they're buying them back. And when you're buying them, they're buying them high, and the stock's going higher, because it's, because they have to continue to buy to cover their shorts. So, probably one of the biggest short squeezes ever. But, what Melvin Capital here, it's interesting, Daniel, because you're seeing how Wall Street is pissed off at this and calling out for the SEC to investigate Reddit and go after these people. What do you think about that?
I mean, it's pretty ridiculous. The idea that you would regulate a blog like that, I mean, you're just going to have to take away opinions, period, if you do that. So if you're of the camp and you're a negative mindset in the stock market in general, and everybody knows people like that, they think it's rigged, or they think it's rigged against the little guy. In a lot of ways, you could point to certain things and make that argument, or some people just think it's total gambling. It's like Las Vegas. This is something you can point to and say is silly. It's not based on fundamentals. Nobody cares about what the company does for a business, whether the business is growing or dying, and that's irrelevant. The thing for me about regulation is no, because I checked it a few days ago on the Wall Street Bets blog, and it was really cool because a couple of people were showing they were taking screenshots, and of course take everything with a grain of salt. I don't know if all this is 100% true, but some of the people were putting screenshots of them paying off student loans or other types of debt. So now they're kicking themselves because emotionally in investing, you think, man, if I would have held, I could have had a lot more, but you can always do that. But to take some off the table and to get out of debt and actually put that to use is awesome. Sure, people are going to get hurt, but it's not illegal to gamble. And who cares if you're gambling here? So the idea of regulation and bailing out the hedge funds or protecting them or whatever is beyond silly, because they do the same things. And it's just, it's turned against them right now, and a lot of people are going to get hurt. On the bailout, real quick, Citadel is supposedly the biggest purchaser of Robinhood trades to execute. Is that right, Frank? Have you seen that too?
Well, basically, they're the high-frequency firm that's behind Robinhood. So remember, Robinhood came out and said that, hey, we started a free trading platform, and that changed the landscape of the entire industry. Everybody had to go free. Obviously, Robinhood has to make money some way, and through Citadel is basically...
right, they're one of the companies that purchase to execute those orders. What's interesting is that they get most of the Robinhood volume. It was my understanding on reading through Zero Hedge and a couple different sites. But that's funny because you see a lot of the back end stuff, and then you turn around and you put more capital into somebody that is suffering from that. So if you want to talk about regulation, as the article pointed out, is that legal, or should that be looked at? Are you allowed to buy the orders on Robinhood and then turn around and bail out the guy? We'll see.
Well, I mean, it hasn't really worked for them, right? I mean, the bailout, because I think they tried to short again. And yeah, there's a couple things here, right? One of the things is that it's ironic that these Wall Street guys and Citron, Andrew Left, has posted on his Twitter account, and this was just a few days ago, the 19th. And he's like, I'm doing a whole presentation on GameStop, and I think GameStop was at 40, maybe 45 or something around there. He's like, why the stock is going back to 20. I have a live presentation I'm going to do. Make sure you watch it. This is on the 19th, right? So what happened is, this Reddit blog and everything, they were like, all right, let's just blow them out of the water. And this is when it was at 40. It's over 300 now. I have a lot of respect for Andrew Left. He's been right when he shorts a lot of stocks, and I've spoken to him personally and met him personally. He's he knows his stuff. But there's other short sellers out there that are complete garbage. And I've covered this before too, where they'll come out with a short report, and of course they load up ahead of time, right? So they load up on the short ahead of time, and like Citron did, and then they'll post something and say, "Hey, we're going to come out and tell you why GameStop's a short." So right away you're going to see GameStop start coming down, and they do the presentation. It comes out even more. But when you read the disclaimer, these guys are allowed to get out of that position whenever they want, right? They could be out of it before you even watch the presentation. Right. So they're going to make money. Right. So they're loading up on it, and then they let everyone else know. It's almost like, front running. That's what they're doing. Front running, which is perfectly fine. Right. You could do that all day, and it's legal. I don't know why it's legal, but you could do that. And then what these short sellers do is in the disclaimer, it says all this information we provided, we believe to be as reliable, but may not be, meaning that it could be complete horseshit. Everything that they said, it could be complete lies. And because they put it in the disclaimer, it doesn't matter. Now, after they launch these massive short campaigns, now they have these ambulance-chasing lawyers that will launch investigations, and it goes right up on the Yahoo blog. This company's being investigated. Again, this is all common. They're all together. They'll also launch this on numerous platforms. Seeking Alpha is one. You'll see it at Market Watch. You'll see all this, the short selling. That again, everyone gets a piece of this. And they have this massive campaign that they launch, and they all make a fortune. And usually a lot of these stocks don't deserve to go down. A lot of bullshit's being said about them. And then, they'll get crushed 60, 70% and eventually go back to back higher as all these guys, are out of their position. This is the system. This is how it is out there, right? And again, it's mostly Russell 2000 small cap stocks, an area that I've been covering 25 years. Now you have a coordinated effort, Daniel, where everyone on Reddit, there's no one that you'll find on Reddit that says GameStop is worth 100, 200, 300. They're not saying, they're going to open up stores and it's game changer. They specifically said, we know that a guy has major shorts here, and if we buy this stock, he's going to be forced to cover, and this thing is going to do the freaking roof. They didn't know it would be this big. They'd have 2 million people on their blog now, probably 3 million, like I said. But they're specifically say this is public information, and that you could start a short squeeze if you start buying these things, and you have enough money to put behind them. Usually you don't against a $1 billion hedge fund. This time they do. That's pretty scary, but it's perfectly legal. I mean, I don't know how they can come after them, right?
Yeah, I mean, like I said, so what? They're putting their opinion out there, and some of them are making money, some of them are going to lose money, but that's a market. I mean, there's nothing wrong with being silly. What's the difference of going to Vegas and putting your money on red or black on a roulette wheel? You're gambling at this point, so yeah, I'm okay with it. I hope and Andrew Lefts for Citron, they put out a video today. And he said he covered the majority in the 90s. He covered big loss, he said, but he said he has a manageable position. He's not blown up or anything like that. Kudos to him. And he did offer some advice and said, hey, if you've taken profits, put some back for the IRS because, if you hit a losing streak or invest that money and then lose, you still owe. So interesting. Yeah, I don't. It's entertaining from a lot of perspectives to me because it does have that David and Goliath mindset. I think you can apply this kind of mindset and division across to basically anything. This is just the stock market's version. And, we'll see what happens. But the interesting thing is if you're up millions of dollars or hundreds of thousands of dollars, at what point do you say, all right, I'll take a little off the table? And that'll be interesting from an emotional and psychological level from me. And we'll just watch it. But hey, I'm on the sidelines. I wish I bought it like everybody else, but it doesn't intrigue me enough to go fishing and try to throw this at.
And I know it is intriguing for you guys out there. If you want, put a couple $1,000s in that you could afford to lose. You could look at a lot of it. It's easy to find a list of companies that are being sold short, but you could easily attack these guys. I mean, you can see the percentage of float that's short. There's a lot of places you could look at that, tons of places, but not individually of who's shorting the stock, but a lot of these guys come out and say they're shorting the stock. So, right now you could target a lot of these companies and again, you're just telling everyone to buy something that's resulting in more artificial buying, right? Because these guys have to cover their stock or cover their shorts. But more to the point here, and this I think is the biggest takeaway, which I think is being lost out there. This is a fundamental change in the stock market. I mean, this is something that's changing the landscape of the entire market. Where you had the old guard on Wall Street, $1 billion funds. They did what they want. They go where they want. Now, I mean, look at the big stories here. Bitcoin. Right? younger generation. Then you have, look at the guys who are supporting. Look who's tweeting about this, about GameStop. You have Chamath, who's, a young guy, right? Billionaire, very, very successful. Winklevoss twins, which, again, Bitcoin guys, and Elon Musk, where, Wall Street almost hates this guy, right? Just all the way up, and the fundamentals are terrible. He's now the richest person in the world. But these guys are getting on board, and you see that old guard of the, multi-billion-dollar hedge funds and high-frequency firms, which I don't know if you saw their performance. The high-frequency firms, guys, they went I think Renaissance in something like 15 years had 3 losing quarters. They're down tremendously. They're down tremendously now over the past, it's pretty much since COVID and now. But what these guys are doing, this young guard, where you could never really challenge Wall Street, but when you all come together and you see all of them come together and the power that they have, you can't ignore it. If you want to have fun with it, have fun with it. If you want to buy calls, you never know. Because if you hit, the risk reward is worth it. You buy calls, you put $1,000 in it. It could be worth $50,000, $1 million. If you bought them at 20, it's 300. So it's worth to gamble a little bit. Don't get stupid though, because you're going to get crushed eventually. It's just, everybody keeps saying that. GameStop can go to 700 and stay there for 3-4 months before that happens, but. For me, it's the changing of the guard. You're seeing the volume. You're seeing the contracts on the NASDAQ, record highs, for option contracts. But, old Wall Street used to run the show. And we're seeing that changing of the guard where, these, we say that they're kids or they're young and they're traders. They have incredible power, Daniel, incredible power. As you could see, putting this Melvin Capital, they were going out of business if they didn't get, $2.7 million in funding. This is a $12.5 billion fund. This isn't a guy that has $300 million and shouldn't know. These guys are highly leveraged, and he got caught out there. Everyone knew his position. To me, it's pretty amazing. There's something to be said about that.
Yeah, I totally agree. I think it's incredible what's going on, and you can claim victory for them because obviously the price of the stock is up tremendous. AMC, the other BlackBerry, although they're getting some tailwind, I think, from a settlement with Facebook or something in a lawsuit, but. The heavily shorted stocks, I think it's pretty neat in a lot of ways because it's showing people that, hey, the little guy can fight back essentially. And, it's a crazy tug of war. I wouldn't, just like you said, if you want to gamble and kind of use that mindset and have fun with it, great. But I wouldn't get in the habit of this tug of war on regular investments. But for speculations, it's a lot of fun.
It is a lot of fun. And just the capital coming into this market is insane. We're looking at, and we could turn the page here because we're seeing GameStop. But again, guys, if you want, the risk reward, you just have to realize that you could lose, all your money. But the risk reward here is incredible. With the amount of money you can make, if you do get involved, again, you want to look at the markets and you want to say, okay, I'm not going to buy GameStop 200. It has nothing to do with the fundamentals, but you have to be willing to adapt to where, certain things are working. Adapt to Bitcoin, adapt to some of the short selling stuff, adapt to, grow, just like you're adapting where we're seeing, large cap tech do better and start to come back. People don't realize this, but since November, large cap tech has significantly underperformed the markets, right? Up to like 2-3 weeks ago. And, we have some big earnings out from the majors and Facebook and Google and Apple this week. But I don't know, just to see the rotation in money and cyclicals and small caps surging 25% in a month in November. The highest ever in a month. Just understand this is the new market. This is where volatility is. Who's going to do great in volatility? What sectors are going to benefit from the new administration? It's not so much where, the market's going to crash. Certain sectors are going to do bad and certain sectors are going to thrive. Anything climate change, have you heard? Hey, Daniel, you're going to love this because I know you don't want to talk about climate change, but every single company, now that Biden is one, every single company is coming out and they're saying how they have initiatives for climate change and we need to say they have to, right? They almost mandated you have to do that or they're going to come after you. The mob will come after you, right? When I say mob, I'm saying social media, they'll attack you. This company's terrible. Your own employees, we've seen it at Facebook, right? Attack Zuckerberg. But every single company's announcing that initiative. They're putting money into it. They're allocating money. That's what you need to understand. Whether you believe in climate change or not, every company is allocating money to it. Doesn't matter if it makes sense or not. So it's up to you to be pissed off if you don't believe in climate change or be happy with it, or you can make money on it, right? And that's what we choose to do here.
Yeah, absolutely. I think there was a SPAC that, an ESG SPAC that went live today. It was across CNBC this morning before we started taping the podcast. Yeah, that's definitely the trend that we're heading. That's the roadmap you want to follow and at least look into that. So everything, when there's some executive orders coming out that are making the Oil markets, volatile, you could argue, with no more drilling on federal lands and all that kind of stuff. But yeah, companies are going to front run that. They're forward looking as well. And if capital can flow into there in a good risk reward way, then we'll look for that as well and hopefully benefit from it.
Yeah, no, absolutely. And you said something about SPACs. SPACs is another thing, right? It's a vehicle that's created, a special purpose acquisition company. What they do is it's a holding company that trades publicly, and then they'll go after a private company and purchase it. And then they'll, it immediately becomes public. Now, so many of these are being, it's insane where, I got some numbers here. 194 traditional IPO deals raised $67 billion. This was as November 30th, right? I think it's like $90 billion now in total. That's the best since 2014. So 194 traditional IPOs deals raised $67 billion. So that's IPOs. There was 200 SPACs in the same time frame that raised $64 billion. So 200 SPACs compared to 194 traditional IPOs. SPACs raised $64 billion as of November 30th. And traditional IPOs raised $67 billion. So we're looking at it taking half the market right now. Again, it's going to explode this year coming up. But there's lots of things that people don't understand with SPACs, where it's basically a pyramid scheme. That's what it is. I mean, you have the early investors.
Boy. That's going to get some attention.
Yeah, but it really is. I mean, so you have the early investors. That's why all of a sudden you see Goldman Sachs. You see, all the major players are now getting involved. We all have, it's not just. You have Bill Ackman, Chamath, now you have private equity, Apollo Group, all these guys, and TBG Capital, and
Shaq's involved in some of them.
But now you also have the Goldman Sachs, the Fidelity. All these guys are getting in because the fees that you make up front when you create these things are enormous. And when they go, they'll raise like $200 million, just say, and what they want to do is try to purchase a company 4x to 5x larger. So that's what they'll do. It'll immediately become public, which you bypass the entire IPO system, which basically tells you it's broken, right? That's why, Sarbanes-Oxley, it's broke. That's why they're allowing SPACs, right, to do this, and everything's cool with SPACs. It's fine. It's awesome because everybody's making money. Everything is always cool when everyone's making money. And the only way SPACs work is if you have an amazing retail market that's willing to buy after the fact, and they'll buy. A lot of these things come out $10, which is no reason why most of them come out at 10. And it'll go to 15, 20, and you have the retail crowd buy 20, 35, 40. As long as you have that, everyone's happy. Just realize that retail crowd is buying it at 15, 17. These guys are in at $1, $2, and they're making an absolute fortune, and that lockup period is only 4 months. What we need to see about these SPACs, Daniel, is how are they going to perform after that 4-month period, after 12 months, after 2 years? Because these guys that are, that's what pisses me off when I see some of these guys. We're creating an alternative energy fund, or could turn this, SPAC. These guys are in it for the short term. You put you put a ton of money in there, you get out in 4 months, now you're liquid and you get into the next SPAC, right?
Yeah.
So that's the goal of these guys, where you want to be liquid and you don't have to worry about buying private companies where you're going to be in them for an average of 7 to 10 years. Think about if you invested early in Facebook. Peter Thiel couldn't sell out of his full position. I mean, outside of a few ways you could do it if you have, you're raising capital in seed rounds and stuff like that. But it would take like 6, 7, 8 years, whatever it was. Same with Airbnb. I mean, that company's been around forever, right? 2007, 8, or whatever it was. And it's just public. So you're locked up. Your money is locked up. With this, it's 4 months and you're gone. And more to the point here, Daniel, and sorry to be talking because I want to bring you in here with SPACs. So they look for companies that they're going to buy 3x, 4x greater. When they buy them, now they still have to get that capital. You know how they do it? They do it through PIPEs, right? Private investment, public equity. So they have to get individual firms and say, hey, we just bought this. Do you want in? And they'll be like, yeah, what are you going to offer me? Well, we'll offer you warrants. If you want to come in for $50 million or $100 million, you get warrants, you get special deals. And we don't even know. They don't disclose what these deals are. So we don't know the warrants outstanding. We don't know anything on these SPACs, but yet all these guys are getting deals to where they're making money almost up front right away. And it only works if the retail crowd continues to buy because it goes higher and no one's bitching and complaining. That's going to change. And it's going to be interesting to see what happens within the SPAC industry. But again, this is something that we talked about, and I just want to throw the points out there. I know I want to get your thoughts on this, so I was just talking a lot there, but go ahead.
Yeah, the numbers you threw out there and stuff, I think there's been over 60 of them this year. We're not even through January. They've raised billions of dollars already. I saw on a stock market MBA website, there's over 250 SPACs out there looking for deals right now. It's just incredible. You're right. You do need a strong retail base to continue buying it. And I do understand the emotion behind it because what I like about SPACs is just a fact. It's a better alternative to an IPO. And we don't have to get off on a tangent here, but it's like a security token. It's a better way and a faster way and a more efficient way to go public. So the SPAC idea, I really like. Can it get abused? Is it being abused? Yeah, probably. I mean, a lot of these guys can get out. Like I said, I hate the fact that it's very hard to find information on the different pipes, investments, and levels like that. That's what sucks. But, the idea, it's always going to, it's just another example of how capital is going to go to where it's treated best and be as efficient as possible. So it is better than the IPO in that traditional sense for lockup periods and everything else. The interesting thing on the other side, Frank, is Goldman Sachs, which is a Curzio Research Advisory holding, betting with the worst of the people. We just can't beat them, join them type attitude there, absolutely. A little tongue in cheek. Mm-hmm. But on the recent conference call, it was interesting because they said, hey, even if this slows down, and I'm paraphrasing here, these companies are going to have to continue to raise capital, right? So Goldman Sachs is in on a lot of these SPACs, getting fees, investment banking fees and all that. Well, going forward, if they're not working out as well as they think, they're going to have to raise more capital, which is just another pipeline and income stream for more Goldman Sachs and investment banking. Yeah. So, again, pay attention to what's going on. If the retail keeps bidding them up, that's great. But this is going to be another positive for banks.
Yeah, it is. It's investment banks, right? I mean, Morgan Stanley, Goldman Sachs, these numbers are going to be blown out. They're going to raise a dividend. They're going to be buying back their stock. I mean, these are names that are going to have tremendously of liquidity. Now, I want to tell you something. This just came up because we have a site that we use, briefing.com, really, really cool. I mean, a little bit expensive. It used to be a lot cheaper, but anyway, it gives you just headlines. I'll show it to you. The headline just came out because you'll see what time we're doing this. It's 11:56, but one of the latest headlines, 11:46 for AMC Entertainment, which is up $10 today. It's a $15 stock. It's up like 200%. TD Ameritrade just came out and said, in the interest of mitigating risk for our company and clients, we have put in place several restrictions on some transactions in GameStop and AMC and other securities. We made these decisions out of an abundance of caution and amid unprecedented market conditions and other factors. That's a freaking crazy statement. That just happened right now.
Yep. I saw that. Yeah, it's ridiculous. I mean,
stocks going higher and higher. Well, out of cautious for investors. I mean, you basically, it should be a free system. And this again, these things are going higher. But if you disagree with it and the short selling, you have to disagree with the hedge funds who throw these, they go on Twitter and say, we're going to short a stock, and they're already short this whole freaking game that they played, right? Now, these are the people out of bitching because they're getting wrecked because people found a way to wreck them. Yep. And, you're seeing companies being halted in I don't know. So it says that we made these decisions out of abundance of caution, unprecedented market volatility, but to mitigate risks for our company and clients. What does that mean? I mean, who's at risk here? Because 95% of the people are long and they're buying calls. And if they lose money, it's money in the account. I mean, what TD Ameritrade is saying here, Daniel, is there's probably a massive amount of margin here, and they're worried they're going to get smoked somehow. Because why would you stop that? Because people are making money on this. And if they don't, they're going to lose the money that's in their account. But for them to come out like this, it's going to be interesting to see throughout this day. We're taping in the middle of the day, guys, Wednesday. How many more brokerages say the same thing? Robinhood's not going to come out with a statement like this. No way.
Robinhood, you'd hope not. I mean,
I bet you Fidelity. I bet you, all these other platforms, if it's E-Trade or Ameritrade, whatever. Well, Ameritrade's here, but E-Trade. I mean, they're all going to be coming out with this, and yeah, I don't get it though. I don't understand what they're trying to do here.
Yeah, my gut reaction is it's scary because I read that as saying, hey, you're too stupid and you don't know how to make good decisions, so we're going to limit the decisions you can make. I mean, like I said, there's nothing illegal about being silly or gambling with your money. There's nothing. I mean, it might not be a good idea. It's not a good idea in a sense, but that's not for Big Brother, in my opinion, to say. The crazy thing here is, hedge funds are blown up, but what if you're a trading desk and you're caught on the wrong side, or like you said, you're too wrapped up in margin, or something isn't square, and maybe you're worried about liability on that end. That's a big move. I mean, this is crazy. So we'll continue to watch with popcorn, I guess. But
and remember, guys,
that's impressive.
When you see the kids, I read some of them, but they're all basically saying, "Hey, this is why we're doing it. It's a short squeeze buy." They're not saying GameStop's going to come out with news that you don't know about yet. And they're not putting out false stuff out there. Some of them are, so you have a few. But basically, this is about, hey, we have information. It's public information. We know guys incredibly short, and they're probably leverage out the ass. So if we all buy, it's going to go higher and it's going to trigger these guys, and we're all going to, to buy their stock and create a short squeeze. We're all going to make money. They're saying that. They're saying that, right, on the blog. It's a lot different than, hey, making up a complete, fabricating a story that doesn't exist. And then you have Elon Musk tweeting about it. You have Chamath tweeting about it, who said he bought calls at 70 or 80 and showed everybody. And this was a couple of days ago against 300. It's just interesting to see what's going on here, Daniel. It's going to continue. I mean, I wonder what the SEC could do. How could they bring charge? I mean, there's some people that are probably, making up stories and stuff, but the majority is, they're all on the same page and they all have the same thesis. So it's kind of hard to argue. And if the SEC does take action, they should be taking action as short sellers too, and do it both ways, right? It shouldn't be just one-sided. That may happen or may not happen. But again, it doesn't, if you guys get involved, just be careful. You're seeing a lot of, again, TD Ameritrade, I'm sure it's not going to be limited to them to just limit, what you could buy and sell and what's going on. But Dan, you said you looked at the calls yesterday. What were they?
I was trying to look at just some different
GameStop
calls and puts and just see the bid and the ask. I mean, the difference between bid and ask and the price, it was just hilarious.
So the bid is buy, ask is sell. Yeah, so,
it's just why there were several dollars in between different strikes and all that. So
what was it? How much?
Oh, there were several. I mean, a couple of them, and there could have been a lag and some behind, because when things are going up and down hundreds of %, I can't imagine everything that goes into those. But there was calls and puts that had $5, $6, $8 spread differences. So that's just unbelievable.
Yeah, I mean, it's...
So be careful if you're going to wade into there and have fun.
Yeah, I know. It's just, expect to lose your money, but still, I don't know. It's just... it's crazy times. Now, I wanted to talk about some of the earnings. We saw Microsoft report, which was, Microsoft was unbelievable, right? I mean, it was, blew out the numbers. Stock initially went up, and then it's like flat as I'm talking right now. It's, I think it's up a little bit, went back up. But the numbers that they reported, and Azure is their cloud platform, saw a 50% rate in growth. I mean, just... We're not talking about a small cap company where it's, you grow 150%, 100%. This is like one of the largest companies in the world, growing sales of their biggest division by 50%, meaning that they definitely have pricing power and they definitely have more customers coming online. Again, guys, when you think cloud, it's simple. You just think that they're tracking every single step of you. They're keeping all this data into the cloud. Now that they have the cloud, they have this massive amount of storage. Now you could throw AI on it and artificial intelligence. And artificial intelligence only works when you're able to analyze data for a very, very long period of time, which they've been doing for 10, 15 years now. I just didn't know about it that long ago. But it's not so much where people should be scared where, they know what I'm doing. Or listen, they know exactly what you're going to do right now. They know where you're going. We're creatures of habit, right? I mean, we drink coffee at the same time. We go to the bathroom at the same time. We go on vacation at the same time. We do the same things. We work the same out. So they know everything we're going to do before we do it, and how we buy, what we spend on, what we need. And, that's gold to any company in the world that wants to have a massive return on ad spend, right? Because you know exactly what they're going to buy. And just seeing these numbers, and AWS is going to come out, I guess Amazon, they're going to report similar numbers with massive growth. Those are the two kings of cloud. Pretty incredible, right? I mean, and it wasn't just them, right? It wasn't just that division. It was divisions all across the whole company. Yeah,
I mean, they basically just beat across the board handily. Advertising revenue jumped 2% year over year, it's not a huge increase, but it's a big deal because in the previous quarter of this year, ending in September, it declined 10%. You pointed out the cloud revenue jumped 50% year over year. That's up from 47 and 48% growth in the last couple of quarters in this year. So it's amazing. I mean, it's around 1.8 trillion, almost $2 trillion market cap, and they're growing those divisions that fast. It's incredible. And that you're going to see more separation. Anytime they talk about, I don't want to beat a dead horse here because I've talked about several times. We've joked and said Microsoft, Apple, and Microsoft, Facebook, they're such great businesses as far as the return on capital and return on investment. It's hilarious. And the headlines about breaking them up and stuff, I think, should be ignored and or bought on weakness. And this report is another one of those. They're huge conglomerates, and growth is still, if you're growing everything at 15 to 50%, why not have a 30 PE price to earnings multiple,
It is really incredible. And I'm just looking at guys, the Xbox grew 40%, right? Because they came out with the new one. You have LinkedIn grew tremendously. I mean, every single division of this company is just on fire right now. And I'm trying to bring this up here just to see it. So it's like flat today. It was up a lot more, but the market cap is $1.7 trillion. Have fun. Go on Google and look at the GDP of certain countries. And I'd say that's bigger than 80%, 85%. I mean, at least $1.7 trillion is their market cap. That is unbelievable. That is unbelievable. And you know what? They're going to get bigger and bigger and bigger. And based on the numbers that they reported, it's not even trading at 30 times forward earnings. It's trading at a cheaper multiple than that. Yeah. So they're growing a lot faster. And also we have Apple. Apple's coming out, and that's, I expect Apple numbers to be really, really good. It's run up to a new high. Again, now they're coming back into favor, a lot of these large cap stocks. Microsoft has run up, and I got a thing here. Here you see Microsoft run up from 212 to 230 before they reported, and Apple. So you saw that rotation out of like cyclicals and things like that, which were doing fantastic over the past few months since September to like, beginning of January. And now, we'll see what happens going forward. But, guys, just be, that's what you have with our newsletters at Curzio Research is, we're aware of these trends. We see what's going on. We're trying to position you in them. And we've done a very good job getting into cyclicals early, getting it before everybody was telling you that, cyclicals are great. We bought Goldman Sachs and a couple of guys made fun of me 3-4 months ago, up over 40%. Now everyone loves the banks. Just getting into these division or different sectors, ahead of the crowd. It's not that difficult to see. We've been able to do it, and it's a lot of fun right now. But I'm sure Apple's going to blow out the numbers, right? Daniel, I can't picture them not blowing out the numbers.
Yeah, I mean, of course, anything could happen, but yeah, I would expect, huge growth. I'd expect them to impress as they always do. I mean, they're just one of those goofy machines that's just seems like, they're going to keep taking over and taking over. They're over $2 trillion, right? Their market cap. Do you have it up in front of you?
Let me see.
I think it's already over $2 trillion because I think they have the.
It might be. Let me see.
They hold the number one spot. So
I'll take a look right now. But so when let me bring this up for you guys. Again, you can Curzio Research YouTube page, guys. I mean, we're getting a lot of traction now. We show a lot of charts and figures and how we do our research. Everything's in video format. We're going to be doing everything in video format. My newsletters are in video format, but a lot of this stuff, especially daily reports and stuff like that, I do live streaming and everything. That can be found on Curzio Research YouTube page. So I know a lot of you listen to this iTunes, but if you want to see my face, my ugly face, and Daniel's pretty face, you could actually do that, and you'll see everything on YouTube. But let me see, with the market cap, it's only 2.4 billion. Trillion.
There you go.
Billion, I almost said trillion. 2.4 trillion. You know how much money that is?
Nope. Can't even fathom it, be honest with you. Wow, that's crazy.
2.4 trillion. And I want to show you guys one last thing here. So this is like the briefing platform, which is really, really cool. It just gives you, it's almost like a Cliff Note version of everything that's going on, but it's not all in your face where it's very difficult, but this is a lot of things they do. So this is Apple first quarter earnings preview. So I can look through this and it says, estimates are calling for $1.41, revenue of over $100 billion in sales for the quarter, $100 billion in sales for the quarter. Gross margins, 38%. You're looking at iPhone revenue of $60 billion that they're expecting. But, I'll go through this and it's a quick, and then I can really dig in and see, okay, what numbers do I expect to make or miss? Is it iPads, Apple? What are they going to say? But, it's a good start, but it gives you, this is what they do. And then after earnings, they'll give you all bullet points on the conference call and what they said. But, expect Apple, and it's trading that way because it's run up tremendously. That's going to really blow out the earnings, guys. And, that's expected. But that's briefing.com. I don't get paid by them. They raise the prices and stuff like that. And I guess they should. It's a really good system that we use every day. It just gives you really a Cliff Notes version of everything that's going on. Not biased and you don't have to worry about listening to a commentator that has like a bias or whatever, and an anchor or whatever. But it's really, really cool just to have all this information, calendars and all kinds of stuff on it. So, it's one of the research tools we use. So, Dan, I know you wanted to talk about, because since we have 2 upcoming guests that are fantastic, and I'll give them to you. Mark Randolph is next week. He's the co-founder of Netflix. Awesome.
That's awesome. Yeah, that is great.
And then, so he's going to be on 2 weeks from now. Next week, we're interviewing Spencer Abraham, who's a former Secretary of Energy. So, I interviewed Mark, and that's coming out in 2 weeks. And, I was going to put that interview, he wanted me to push out a little bit further because he's launching an amazing podcast. So we had a great conversation, and I told him what I tell everyone else, which is the hundreds of people that come to me with podcast. It's not competitive or anything, right? Because you can listen to it whenever you want. And I told him, listen, over 100 people have come to me, and 0 have stuck with it. Because they don't realize the work you have to put in, the dedication you have to put in, the guests you have to interview, what you have to, get every guest that we interview, I'm vetting right? Going through everything that they wrote, everything they said over the past 6 months, which is great because I get to learn. And, after these interviews, they always say the same thing. Like, wow, that was really great. That was awesome. Because I actually let them talk and I don't cut them off every 2 seconds. But, and I told them that stick to the program, make sure you have a podcast whatever day it is. If it's weekly, I think he said it's weekly. I said, make sure you do it at that time. It's available because it's like a TV show. If you don't do it for a week or two, people are going to leave. They're not going to come back. I tell everyone the same story, how difficult it is, but you have to be passionate about it. You can't just do it as, hey, I want to do it. And, no, most people do it for months, weeks, and then they stop. But he's coming out with his podcast. But anyway, where I was getting to, which is a long, very long-winded, is that we don't have a guest, right? So we usually take a pick from our guest, Dollar Stock Club. So I got bad news for you guys because we're going to get a pick from Daniel today.
Yeah, well,
so I'm just
maybe
curious.
Not today. You'll get it tomorrow.
Yeah, it's
Dollar
coming out
Stock
tomorrow.
Yeah.
But, we're going to, mention a couple stocks. We'll take one of those, I guess. But I'm just curious to know what it is. This way I could short it. So
get it on Wall Street Bets. We're gonna recommend GameStop.
This guy, Daniel Creech, is on Wall Street Unplugged.
Good publicity, I guess.
Yeah. So, and all kidding aside, the last pick, because sometimes we try to have a pick every week, but sometimes we'll have guests, that are just, are not analysts, and we might not have a pick, but, we try to have one, and maybe I'll throw one in. But the last pick Daniel threw in was Chubb, right?
Well, no, that was for CRA.
Oh, CRA.
No, in fact, my last pick for Dollar Stock Club was Toll Brothers, which we got out for a small 2% gain, and it's rallied significantly since then. So it was bad timing. We got out for a 2% gain and all that.
But and Chubb was one of the ones you recommended in CRA, which is up how much? And this is just a couple months ago?
No, 20-some%. Yeah, it's a half position. So it kind of ran away from us a little bit, but it's coming out with earnings soon. So we'll reevaluate, maybe add the second half.
I think 2-3 months ago. So yeah.
So yeah, Toll Brothers is aggravating because, like I said, we got a 2% gain. But if you forgot that or missed that update, congratulations, because now you're up probably 15, which is nice. But yeah, for tomorrow's pick, it'll be somewhere between, I'll tease it a little bit. I've been looking at gun stocks, Strumruger and Smith & Wesson, some ammo stocks. I also like oil and energy stocks. I wish they were pulling back. Oil and everything was down earlier, but those things are kind of rallying. So we want to look at momentum, and, it's not just about fundamentals, and this is a fun trading newsletter. So we'll see something about volatility. I've run several screens. So yeah, we'll come out with something tomorrow for everybody.
Yeah, and you like gun stocks. Why?
Well, I think 2 reasons. One, I think they are solid businesses, and we are moving in a direction of the country towards being more aware of everything. I think there's a lot of political unrest. There's obviously calls on not both sides, but political headwinds about defunding police and lack thereof. You also have riots and more unrest and all kinds of stuff going on. So you don't have to look very hard to think, man, and to have the news paint a negative picture. And if you look at FBI background checks and things, they're up sometimes 30% year over year, depending on when they report. And a lot of first-time gun buyers. So those are good businesses. I mean, I'm a gun guy. I'm from a small town. I like the Second Amendment. And, there's been talk about taking that away. So I think there's some headline risk reward there that around a good business that you can really look at.
Well, I just pulled up the chart for Strumruger here. For Smith & Wesson. And yeah, these things ran really higher since, December. You're looking at least it's, $15 and it went to $22 and it's pulled back significantly. It's like $16 right now. I did ask one of my friends who shoots, and I bought my first gun as well, which, I shoot, which is really cool. I wouldn't say I shoot because I'm disrespecting everyone who does shoot because I really didn't know anything about guns. And I was, a subscriber who is in that business, came down, was visiting anyway, and, went to the shooting range with him. It was pretty amazing. And I wound up buying a gun. But this person, first of all, has lots of guns, and everybody wants to buy them off him. Second of all, he said he has 2 shotguns, and the shotgun shells, he said that someone was quoting him at $5 for one.
Yeah, ammo's going crazy right now. I mean, it's nuts. So, and you can't blame him. I mean, you look around, like I said, there's a lot of unrest, a lot of nervousness out there, and it's kind of play on what you think is going to happen, and why would that momentum stop? So it's kind of one of those things.
It just makes you think too. I mean, if someone robs your house, right? It's like, you better make sure you hit them. It's $5 for every time you miss them, right?
It's cost effective, yeah.
It could be like $50, $100 before you shoot the guy. I mean, it's pretty crazy, right? These prices, it's insane. But so look, we covered a lot. There are earnings coming out. I mean, any final thoughts, Daniel? Because again, the SPACs and GameStop, that we covered, but any parting thoughts here? Because
no, I mean, enjoy the entertainment side of it. Don't lose faith or hope or get aggravated with it. Just enjoy that. If you're participating, do it in a risk-adjusted manner. And fundamentals will matter at some point, but we'll try to call out the environment we're currently in and help you navigate through that. But it's entertaining, but there's nothing crazy out in the ordinary that needs regulation here, in my opinion.
Yeah, I don't think so either. But I do think that there's a fundamental change that is taking place right now in the markets. That's and when I say it's structural, this isn't a trend, right? This isn't something. Oh, it's going to go up. It's going to disappear. I mean, you have all these people who are trading, getting together, speaking to each other. Massive groups, and again, they're not that they're targeting anybody, but it's not that. I mean, they took down a $12.5 billion fund. Yeah. They took it down. They got to get bailed out, right? A $12.5 billion fund, and it's going to change the landscape for short selling, right, forever. Because you used to be able to go on TV, and all these guys. Same with Chanos. I went to so many different conferences, Daniel. The Iris Owen conference, the Value Investing Congress conference. And that was used as a platform for David Einhorn, who loves to short a lot of stuff, and also Chanos. And they used to go up there, and now they broadcast on CNBC, which means you never have to go again because it was $5,000 a ticket. And they used to go up there and say, "Here's what we're short." And as soon as they put that name on there, and they do like a 40-minute presentation, 30-minute presentation, you could look at your phone and it think 5, 10, 15, 20% it was down. Those days, I think, are over. I mean, now you're looking at, if you're going out there saying what you're shorting, especially if it's a small cap name, right? Large caps are a little different, right? It's just much more volatile, a lot of more volume in them. But when you're looking at small cap names where I don't even know what GameStop's market cap, what's GameStop's market cap? Do you have an idea? You have it there, Daniel?
No, it went from $2 billion to $10 billion. I'm not sure.
It's much more than
that. And I'm getting mixed readings now, so
It's
I mean,
much more
you
than
check
that.
two different sites, you get different percentages and everything. But
Yeah, I'm trying to.
this says 10 billion, but that can't be right because that's what it was a couple days ago.
So let me see. Yeah, it's amazing. And the guys got to be careful. You say it's $22.5 billion. This is a market cap that was a couple $100 million. It's $22 billion right now. I mean, that is absolutely insane. And if I was, here, let me bring this up for you guys. So if I was GameStop, I'd raise like $10 billion right now. I raise $5 billion at 200. That's what I would do. I mean, that would be great. Now you change the whole landscape of your company, right? It's insane. But, that's the market we're in. If you want to play around, I'm not going to say, stay away from it, you're crazy, or criticize the kids or even criticize Wall Street. This is the way it is. This is what we do here at Curzio Research, guys. It's you can bitch and complain. You can hold up a sign that you hate what the Fed's doing. Go ahead. That's your right. But if you want to become wealthy, create generational wealth, put your feelings aside. Right, which is very hard for everyone to do, even for guys like me, been in this for 25 years. Put your feelings aside, see what's working, and put a little money into it. Something like this with all these, short companies that have huge short ratios. Again, not too difficult to find. You can find that on Yahoo Finance, which is a free site. I was just bringing up our free site, CNBC, so everyone can follow along. Not that I use them for charts or anything. We have professional services here, but if you want to dabble in it, just understand, only use capital that you could absolutely lose. Because if you could lose $3,000, $4,000, $5,000, you're not looking at 3x gains. I mean, you're looking at 20, 50, 100x gains right now. That's a good risk reward if you could afford to lose that money. It's not for someone that only has 10,000 in their account and going all in. Don't know. But, worth it. And you see more interest than ever. Yeah, that's why it's a fundamental where so many more people are asking me about stocks, how to trade, how to get in. Which is a good thing, but it will come to an end. It hasn't yet, and valuations will matter eventually. But right now they don't, and you just got to stay ahead of the crowd. So I guess we'll end it there. Daniel, I want to thank you so much for coming on. I really appreciate it, man. We covered a lot today. Really great stuff. Great work. Thanks, buddy. I really appreciate it.
Yeah, a lot of fun. Have a great week, everyone.
All right, guys. That's it for me. Be sure to check out Curzio Research YouTube page. Again, all this is on there. It's really cool. I'm bringing up charts and figures. This is for you. I mean, I like watching those podcasts in video formats on ESPN and Part Interruption, things like that. And, we're just getting really, really great feedback. And, the fact that I could share my screen, show you what I'm doing, it's more than just giving out stock picks, which we do, especially through our newsletters, but it's educating you, trying to help you become a better investor long term. Again, that's what we all want to do, right? We want to make sure our kids have better lives than us and make sure we have a nice nest egg to give them. And, we really focus on that here at Curzio Research. So again, you can find all that stuff, Curzio Research YouTube page, subscribe, like it. But again, it's starting to get a lot of traction and we're going to have content on there that you're not going to see anyplace else. So definitely take a look at that, especially for daily content. This is it for me. As always, I'll see you guys in 7 days. Take care.